Today's topic is building the perfect investment for retirement. In building the perfect investment for retirement takes very careful planning. It takes a lot of knowledge. It takes time. It takes perseverance. It takes discipline to ensure that you have the right plan as you navigate yourself through retirement. Thanks for tuning in to Money in Motion. My name is Walt West, founder and CEO of the West Advisory Group. We're here to teach you how to prevent money falling through the cracks in retirement. And remember, it's not what you make, it's what you keep. So let's start this topic off and talk about the characteristics that make up the perfect investment. So if you had to think about all the characteristics or the things that a perfect investment must have, what might they be? So let's start with a list. The first would be growth, right? You'd want to have unlimited growth and to make sure that you're always growing your asset efficiently. The second could be liquidity. You would have access to your money whenever you want it. No strings attached. Another characteristic could be tax-free. You never pay taxes on any growth of the investment ever. Another characteristic might be you pay no fees. There's no cost to own that investment. Another characteristic might be simply that it's guaranteed. I have unlimited growth, but I can never lose money on that investment. Wouldn't that be perfect, right? And then lastly, how about income? It guarantees income that you can never outlive. So there's a great list. You got growth, you got liquidity, you got tax-free, you pay no fees, you never lose money, and you have unlimited income. Now the question I have for all of you, if you think through it, what is that investment? What investment could potentially give you all those characteristics? So without you racking your brain too much out there, I'm here to tell you that investment does not exist. It doesn't exist because there isn't any one investment that's going to provide you all those characteristics. It's all about building an investment strategy. It's a strategy in which it can get you as close as you possibly can to that perfect investment. Now, everybody watching this video today has different aspirations about what they hope to accomplish during their retirement. Some of you are probably very aggressive. Some of you are very conservative. They want no risk at all. And some of you are probably in the middle of the road. So again, there is no one size fits all. It's building the perfect strategy. So today we want to take a deep dive in talking about what those things that you should consider in building that investment strategy to get as close as you can to your definition of that perfect investment. So one of the first steps of building your perfect investment, you have some prerequisites here. And you need to assess what it is that you want your retirement to look like. How much money do you need? How much income do you need monthly? How long do you think you're going to live? And again, obviously, I know we don't know how long we're going to live, but you have to think through a process or have a process in which it helps you to determine what that might look like. Depending on when you retire, if you retire early or retire later in life, you have to think through how many years could I potentially be retired. This is going to have a big impact on what your investment strategy should look like as you create this imperfect investment for your retirement. The second prerequisite is to understand your risk tolerance. How much tolerance to the market are you willing to accept? As you move into retirement, we tend to be more conservative, right? So your working years are over. You're no longer getting those guaranteed paychecks or that mailbox money that I like to refer as. Those checks have stopped. And oftentimes when you first retire, and I see this many times with our clients, there's a little bit of anxiety that sets in when they make this transition from the accumulation phase to the distribution phase. So you might be more aggressive during that accumulation phase because you have those checks coming in every single month from working years. But when that stops, you tend to start thinking a little bit differently and being more conservative with what that approach might be. This is very important to consider what that tolerance of risk might be for you, because that'll help to dictate how you arrange your investment strategy when building that perfect investment. So you must take a deep dive in the risk element in which you're willing to accept with your investment strategy. So now that you understand your risk, how much money you might need in retirement, what your lifespan might look like in retirement, now it's time to dig into your investments. What is now your desired investment mix? You know, when you talk about investment mix, it's not necessarily a bunch of stocks and bonds that you simply own as you navigate through retirement. I think the conversation needs to go a little bit deeper. There's many asset classes out there. Asset classes are one of which are places in which that you can house your money to grow that money over time. Whether you're looking for growth, whether you're looking for income, whether you're looking for growth in income or income and growth, will determine what that investment mix is. You must educate yourself on the different types of assets that are available or investments out there, whether it be individual stocks and bonds, mutual funds, exchange traded funds, real estate investments, alternative investments. We'll talk more about those here in a minute, but there's all kind of investment classes in which that you can consider. Some have more risk than others, but you need to have a good understanding of what each of those investments look like so you can better tailor those as you create that perfect investment for your retirement. So after you've had a chance to evaluate all the various types of investments out there that you might consider, you might want to take a deeper dive and think a little bit differently about how you arrange those investments from three different approaches: strategic investing, tactical investing, and alternative investing. So let's start with strategic investing. Strategic investing is something probably most of you have done through most of your adulthood as you're accumulating money. Strategic investment is one of which that you own an array of mutual funds or stocks or bonds or exchange traded funds where you diversify those in many different places. And you diversify those dollars to help mitigate risk. But oftentimes you hold those assets over a long period of time. You don't make a lot of changes throughout the time, and you know that the markets will go up and they'll go down over time, but you feel confident that over time your money will grow, even though that you might see some dips throughout there, some ups and downs throughout your accumulation phase of your life. But as long as you hold the asset, you know that what goes down will come back. And that typically is true through a long-term focus when it comes to investment planning. Another strategy to consider is tactical investing. Tactical investing is when you're making short-term moves in your portfolio based on current market conditions, economic trends, or simply simple changes that you may see in different industries and what have you as you're going through a market cycle. So it's much more active in nature. So the idea is there's some sort of market timing oftentimes that takes place in tactical management. And the idea is they're trying to mitigate risk, take advantage of the current market situation to try to get gains in a short-term arrangement. It is a tactic in which it is designed oftentimes to help mitigate risk also on a short-term basis. The third strategy consists of alternative investing. Alternative investing is different than the traditional asset allocation when you own stocks and bonds and mutual funds and ETFs. Here, when you do alternative investing, you're owning more private investments. Typically, they bring less liquidity, sometimes higher risk, with the idea they're non-traditional assets in which that you own. This helps to diversify your portfolio, but you must understand that these type of investments do come with inherent risks in them. So oftentimes there's hedge funds in there, there's private equity type of exposure that you can have in alternative investments. Real estate is a big part of the alternative space as well. So there's another opportunity for you to position your money to help build that ideal investment. Now the question really becomes, How much money should I have in strategic investing, tactical investing, and alternative investing? Should I have my money all in one and not any of the other two? Or should I diversify between the three? Well, again, it goes back to the first questions that you're asking yourself. What is your risk tolerance? And what is the need for your money and your time horizon? But you could make an argument that looking at all three of these strategies and blending them together in some fashion might help to mitigate risk and also put you in the position to give you the highest level of efficiency as you're navigating through retirement. Again, you're looking to build that perfect investment strategy. And as I mentioned earlier, everybody's a little bit different about what they envision their investments to be based on the risk in which they're willing to take. So I'm hopeful this has been beneficial to you, that it help you to help build your investment strategy to support what it is that you're gonna accomplish during your retirement years. Again, thanks for tuning in. Until next time, see you then.